Welcome back. My name's Chris Gosselin, and today we're talking to Dean Fergie from Cyan Investment Management. Cyan's fund has been running for just over 7 years, so it's got a good track record running funds in the small mid-cap space in Australia. Dean, welcome back.
Thanks for having me on again, Chris.
Nice to speak to you. It's been a while since we last spoke. Tell us what's been happening in the markets and what's been happening with the fund.
Yeah, it's been incredibly active in the small cap space. A lot of volatility in the primary markets, and then a hell of a lot of activity in the IPO and placement market. You know, we've seen, I just say, unheralded amount of deal flow on a daily basis. A number of companies placing money and raising money and coming to market through IPOs. So there's been a lot to look at. I guess that makes it, I suppose, advantageous that you have a lot of choice, but also makes it a little bit tricky, and you've got to be a little bit more selective. And more recently, I think the market's undergoing a little bit of fatigue from the amount of money the amount of companies are putting their hand out for capital.
So getting the stock picks right at the current time is not easy, but incredibly important.
Yeah, look, I mean, it's always really important. I think because the market seems to be so flighty that they get onto good deals and they bid them up extremely well, and then they get a little bit bored and they move on to the next big thing. We're seeing lots of volatility in terms of volume, lots of volatility in terms of pricing, and as a fundamental investor, it does make it more difficult because you're seeing a lot of really like day-to-day or week-to-week volatility when the underlying businesses aren't really changing that much. So it makes it hard to, I guess get what you like to see as a steady incremental return over time.
So what do you think is driving this? Is it the retail investor? With a lot of retail investors came into the market sort of as a result of COVID. Is it that side of the market that's pushing the volatility around, or is it the more institutional or fund-based manager?
I'd definitely think it's the former, Chris. I feel that there's a lot of retail money floating around the market. There's a lot of people, with more time on their hands that are trading. When you've seen a market that has been positive for a long period of time, everyone wants to jump on board and get a little bit of that action as well. And I think it's reflected in the performance of cryptos. I'd say that's a true kind of speculative market. We've seen how that's performed, and I think that's flowing over into the stock market, which is creating the volatility and subsequently seeing a lot more companies, trying to take advantage of that through raising their own capital.
There's always a risk with the punters market when it comes to an end. Can you see it coming to an end? There's been a lot of talk about interest rate rises. There's been a lot of talk about inflation. There's now been a bit of a dip in the market with a new COVID variant. Is it ongoing, and do you feel comfortable, or are you taking some risk off the table?
Yeah, look, it's almost a sitting on the fence kind of scenario. I think there is a little bit of risk there, but I think what we've seen over the last 12 months is that any dips get bought back extremely quickly because capital still wishes to be deployed into, I suppose, an asset class where was seen to be, the opportunity for some pretty strong capital gains. So whilst I think there is some risk on the valuation side and certainly in stock-specific scenarios, I think it's still a time to be reasonably fully invested because you're not getting a return elsewhere, and I do see continued demand in the space.
But it's probably also a time to be extra cautious, or just cautious as usual?
Look, I mean, what we've seen in the portfolio is that when you have diversification across a number of different holdings, some will be going extremely well some months, while others really, really struggle, and then the reverse is opposite the next month. So if you have your eggs reasonably diversified across a number of different baskets, I think the overall outcome is actually pretty satisfactory. What I would be, I suppose I'd advise against is having all your holdings in one specific stock, but also in sort of all in, say, technology, all in microcap, all in a growth sector, those kind of things. You want diversified across industry, across size and across, I suppose, sectoral aspects as well. So if you've got those sort of three diversifications, I think you end up with a reasonable portfolio that will perform quite well over time.
Diversification is the greatest reducer of risk that there possibly can be. I mean, you can over-diversify and therefore you reduce your return. But diversification really is number one when it comes to risk, I think.
Yeah, look, and what happens, I think, with private investors is that they'll have holdings that go really well that become a really large part of their portfolio, and they don't really notice because that's just how they've emerged. But we're finding this volatility, it's important to remain really active over time. That we may not necessarily be traders, but when we have stocks that are performing quite well, it's important to take a few of those chips off the table when you've had a few wins, just to keep that diversification intact and not have your portfolio become unbalanced through share price movements.
So remaining disciplined is still another sort of major tenet of your process?
Yeah, I think so. Look, we're professional investors, so that's what we're supposed to do. We don't kind of go away for 2 or 3 weeks and come back and look at the portfolio and say, oh, wow, look how, look what's happened. It's a day-to-day and an hour-to-hour proposition. And when there's a lot of volatility in the market, you need to remain active in order to have the rightly constructed portfolio.
Dean, over time, the 7 years and 3 months, I think you've been in operation, maybe 4 months by the end of this month, you've outperformed the index, you've outperformed the peer group. Not always easy to do that over a 7-year period. Is it just sticking to the knitting, having the process, sticking to that does it?
We operate in quite a small subset of the market, and we don't get distracted outside that because certain sectors running hot. For instance, we haven't been, I won't say sucked in, but we haven't been lured into investing in, the mining stocks that are operating in the battery market and those kind of really hot sectors. So, like what that means is there are periods where we don't perform as well as other sectors. And at the moment, it's extremely hard because you've got a natural cash drag on the portfolio, which means you underperform a little bit when the market's really, really running. There's some sectors that have been extremely hot that'll, investors like ourselves that haven't been in lithium or cobalt producers or explorers aren't benefiting from. So, there are periods where it's difficult, but I think over the long term, if you know what you know and you're disciplined about that and you make right, sensible decisions, then over the long term, you should end up with a good outcome, which is what we've done, and that's been pleasing.
So it sounds like those three tenets: stay diversified, stay disciplined, and stick to what you know. Is that sort of a fair, if I had to pick out 3 things from this conversation? Yeah,
look, I think that's just really sensible. And it is difficult not to be, as I said, lured into the stuff that's really hot and really exciting that you don't necessarily know. Biotech's another one that there've been some great performances in that sector that we have missed out on, but we don't understand it and we don't know how to value it. So we don't get sucked into investing outside our sort of scope of knowledge and experience.
Dean, as always, great to talk to you. I hope you have a great ending to the year. We're coming into December, so I suppose we have to say Happy Christmas and a Happy New Year. 2022, who knows what will occur? We'll look forward to speaking to you. All the best.
Thanks, Chris. Always great to talk to you and be involved with Fund Monitors.